Hi, this is Terry Garner with Investors in Action, and I wanted to talk to you today just real quickly about the elements of a promissory note. Now, a promissory note, or just a note as we call it, is an IOU from a borrower to a lender. So let's say somebody loans somebody else money. It's really just that promise to pay back the money from the borrower to the lender. Now, I'm not an attorney, and there are different laws in different states. So you're going to want to run whatever document you have by an attorney in the state where you're doing business. But there are a couple of key elements that we can go over here to get you started. So first off, it seems kind of obvious, but you want to make sure that your document is in writing. Now, in many states, verbal contracts are valid, and even one written on like a napkin and signed by somebody can be issued as a valid contract, but you're going to want to do things professionally, have it in writing, put it on a piece of paper. The document, the promissory note, must be signed by the borrower, and in fact, it's only signed by the borrower. The lender, the one who's loaning the money, is not going to sign the document. It's going to be signed by the borrower, and that signature can be located anywhere on the document. Typically, it's at the end, but it could be on the top of the front page. It could be in the side margin on the second page. It doesn't matter as long as there's a signature there. You're also going to want to clearly state in print the borrower's name next to the signature so it can be legible. And with the borrower's name, you also want to say their address. So for example, if the borrower is John Smith, there are a lot of John Smiths out there, you want to say John Smith who resides at blank, or John Smith whose address is blank. That way it's very clear who the borrower is and who that signature belongs to. You're going to want to use the words promise to pay, and that's why it's called a promissory note. It is a promise to pay to whom you're going to be paying. So let's say John Smith promises to pay Investors in Action, Inc. the amount of money of $100,000 in U.S. currency. You're going to want to also outline the terms of the note. What is the interest rate that they owe you? Is it going to be interest only? Is there going to be principal paid and it's going to be amortized? Is it going to be an adjustable rate? You're going to want to note, are there any points? Are they paid at the front end? Are they paid at the back end? All of those terms are going to want to be clearly spelled out in the document. And you're going to want to use language that's very familiar. Don't use legalese. I know a lot of lawyers will do that, and it might be very tempting to try to make it sound professional, but really you just want it in plain English. The simpler, the better, and the easier it is for everybody to understand. You're also going to want to note the maturity date. Now, the maturity date is the date when the loan expires and the principal amount is due back. So this could be, let's say for a mortgage, it's typically 30 years, but it could also be as short as 1 week. It could be 6 months, 3 years. It just depends what what the borrower and the lender have negotiated. But it's going to want to be clearly stated when that maturity date of that loan is due. Now, you can do an extension. Let's say the maturity date is coming up. You can have a separate agreement that the borrower signs that says we agree to extend until X amount of date, and then you're going to have the borrower and the lender sign that particular document. Also in the promissory note, you're going to want to have any terms regarding late fees, anything around default. Now, we typically write our notes, we'll write them at an interest-only rate for a 1-year term, and these are notes that we do to fix and flip rehabbers. And then if they haven't paid, they owe us a late fee. But then if 2 months have gone by, they go into what we call a default interest rate, which is a higher interest rate than what the original terms are. And that default rate is retroactive all the way back to the first missed payment. So whatever the terms are, you're just going to want to make sure they're clearly notated in the body of the note. You're also going to want to specify if the note is secured or unsecured. Now, a secured note means that you have collateral that is attached to that note. So if the note isn't paid, that lender can go after the borrower's house or car or a valuable piece of artwork, something of value, as retribution for not getting paid their principal back. So whether it's secured, it doesn't have to be secured. It can be unsecured. You're going to want to note that in the body of the document. And finally, you're going to want to note if there is a prepayment penalty. Now, if you're borrowing money from a bank for a mortgage, say, make sure you really understand the terms in that document, because many times they might have a prepayment penalty where if you pay that loan off early, you have to bring an extra 10 grand to the table. The reason why they do that is because if you've only made a few months of payments, they've only received a few $100s. It's not worth their time to go through the whole processing of a loan, and therefore they put a prepayment penalty in there. So if you're the lender and you're going to require a prepayment penalty, you're going to want to note that in the body of the note as well. If you're not going to require a prepayment penalty, that should be specified too. There is no prepayment penalty for paying off the loan early. So those are some things to get you started. A couple of other key elements anytime you do any kind of a contract is whoever signs it must be 18 years or older. If they're under that, they're a minor and it's not valid. They're too young to know what they're doing. You also want to make sure the signer is of sound mind. If they're too old, for example, and could have some dementia set in, perhaps they're drunk or inebriated, or maybe they just had a death in the family the day before and they could say they were under duress when they were actually signing the document. Any of those conditions you want to stay away from. You want all signatures to be done by someone who's 18 years or older and of sound state and mind when they're signing it. So those are some key elements. Again, I'm not an attorney, so please run the document by an attorney in the state where you're doing business, but hopefully this will get you started and hopefully this will help you on your way. Thanks so much and take care and good luck to you in your investing. Thanks.